Hello friends, so today we are going to discuss all the ICAI study material questions from the chapter mutual funds. Very important chapter, every attempt regularly asked in the examination. So take question number 1 for discussion. Mr. A can earn a return of 16% by investing in equity shares on his own. Now he is considering a recently announced equity based mutual fund scheme in which initial expenses are 5.5% and annual recurring expenses are 1.5%. How much should the mutual fund earn to provide Mr. A a return of 16%? This is the question that is being asked. See, very simple. There is a concept called as investors return versus MF return. Okay, very simple. See, in this question, the what they say now, if investor invest in shares on his own, he can earn a 16% return. So if an investor wants to invest in mutual fund, he should at least earn more than 16%, at least earn 16%, which he can on his own manage. So how much the mutual fund should earn in order to provide the investors with a return of 16%? This is the question, correct? So it should be less than the 16% or more than 16 or less than equal to 16 or more than 16. So which means mutual fund should earn over and above the 16%, so that after deducting all the expenses, it can pay at least 16% to the investor. So we have a formula for that, very simple. See, MF return is equal to investors required return, I call it as investors required return, divided by 1 minus initial expenses. IE means initial expenses plus RE. You see, the expenses I can classify it into two: initial expenses and recurring expenses. Okay, every year there might be few expenses which will be recurring in nature, and there might be some expenses which will only be incurring in the initial phase, correct? Now see what happens. You apply the formula. Here they have given 16%. Yes, personal return, required rate of return for this investor is 16%. So okay, MF should earn how much? 16%. You write it in decimal terms, 0.16 divided by 1 minus 0.055. 5.5% is the initial expense plus recurring expense, which is 1.5%. You will get 18.43%. Okay. Question number 2. See, the unit price of equity linked savings schemes of a mutual fund is 10. The public offer price of the unit is 10.204 and the redemption price is 9.8. Calculate front end load, back end load. See, what is front end load? Very simple. Initially, when you buy the mutual fund, you have to pay something over and above the price. Okay, this is called as front end load. This will be NAV will be there, and this will be added to the NAV while you purchase the units. Okay, as an investor purchase units, he will have to pay. While redemption, while redeeming the units, the investor will be getting the NAV less the back end load, Are you all understanding? So to put it simply, while purchasing, the amount will be added to the NAV. Front end load will be added to the NAV, and while redeeming, this is while purchasing and this is while redeeming, the back end load will be deducted from the NAV. Are you all understanding? See, public offer price, NAV divided by front end load. This solution not required. They have shown an alternative solution. This is not required. See here how to find it. Very simple. This is the price at which they are subscribing. The investors are subscribing, which will include the entry load. What is the difference? 10.204 minus 10 divided by 10, you will get 2.04. To put it simply, assume if the entry load will be added to NAV. This is NAV, assume 100 rupees plus 3% entry load is 3%, assume 3. So total is 103, correct? Now this is the public issue price 103, which will include NAV. How much in percentage they are asking? So which is nothing but 103 minus 100 by 100, you will get 3%. Are you understanding? This is how it should be. Alternative solution given, but don't need to confuse this. You follow, you will get the marks. So 10.204 minus 10 divided by 10, 2.04. 0.04 percentage, you will get the solution. Next, exit load should be deducted from the NAV. So NAV is 10 rupees minus, okay, the exit load, we don't know what is the exit load now, but the total should be what? Okay, should be 9.8, which means in percentage terms, what is the number? Very simple. You put 10 minus 9.8, what is the differential amount? Okay, divided by 10 is equal to 10 minus 9.2 divided by 10, 2%. Are you all understanding? This is exit load. Okay, next, take question number 3. A mutual fund that has a net asset value of 20 at the beginning of the month made income and capital gain distribution of 0.0375 and 0.03 per share respectively during the month, and then ended the month with net assets value of this much. Calculate monthly return. See, fund has net assets value of 20 at the beginning of the month. Okay, and they have made income and capital gain distribution of this much, which means income distribution 0.0375 and capital gains distribution 0.03 per share. And then ended the month with a net assets value of 20.06. Very simple and straightforward question. See what is happening. How to find the return from the mutual fund? See, return from the mutual fund, I'll explain it here. Return from the mutual fund can be obtained through various sources. Basically, see what happens. The return will be in capital gains and income. Okay, this income, I can call it the income from instrument, which I call it as interest. If the mutual fund invested in bonds, okay, it will receive interest, or it might be dividend. All this I can call it as income. Now see here what happens if you consider the return of the investor. Okay, it can be through capital gains and it can be through dividend. I see that what mutual fund earned, we are least concerned with how mutual fund earned this income. Are you understanding? Mutual fund may have earned interest, dividend, all these things. For all the practical purpose, okay, the mutual fund distributes the investor from its interest income, dividend income. It is irrelevant. The mutual fund the investor receives income now. This is one source. Then there will be capital gains. This is another source. So if distributed, it will be another source. See here what is happening from the, this is from the investor's perspective. This is from the investor's perspective. Come to the mutual fund perspective. What happens? Mutual fund earns, okay, returns from its investment. Mutual fund invest its money, correct, in the market or in various securities. It can earn, okay, I can call it as capital gain, correct. The capital gain also, right, I can call it as unrealized capital gain. This is price appreciation. This realized capital gains, which means whatever it realizes now, okay, realized capital gains. And then you have other sources, okay, then you have interest, dividend, all these things. Okay, are you understanding? Now there is unrealized capital gain and realized capital gain. Here what happens is, if you want to find the investor's return, okay, the unrealized capital gain portion will also be considered, which is nothing but NAV1 minus NAV0. This is the NAV appreciation, which is not paid as, which is not distributed by the mutual fund, but this is unrealized gain made by the investor. This is there, NAV1 minus NAV0 plus, I call it as dividend income. Are you understanding? For investor, dividend means, okay, that dividend will have how much interest component, dividend component, these things we are least concerned with. So this is dividend for the investor divided by NAV0. Something similar, okay, it is as good as in the portfolio management we learned, P1 minus P0, which is nothing but capital gains portion, okay, plus dividend divided by P0. This we learned in portfolio management chapter. The same thing, okay, replication in terms of NAV is how you compute return from the fund. Correct? See here what is happening. Capital gain, they have given, what they have given, NAV appreciation, starting NAV0 is 20, NAV1 is 20.06. Apo, what is the capital gain? 20.06 minus 20. This is unrealized capital gain plus Okay, this is dividend income of 0.0375 is, see here, income and capital gain distribution, which means, see, how you realize is irrelevant. This is realized gain, which means you realize this income 0.0375 and this capital gain 0.03. Okay, which will not be captured by NAV. This is realized capital gain. So this is realized capital gain and this is income. This is realized income. All are written na. Everything you divided by NAV 0, 20, how much you will get? Okay, you will get a return of 7.65% per annum. 7.65% per annum. Next, take question number 4. An investor purchased 300 units of mutual fund at 12.25 per unit on 31st December 2009. As on 31st December 2010, he has received 1.25 as dividend and 1 as capital gains distribution per unit. Required the return on the investment if NAV as on 31st December is 13. See what they are asking. Okay, 31st December 10, he has received this much and this much as income. Anyway, this is opening NAV, 31st December 2009, opening NAV 12.25. Are you understanding? Similar type of question. See what happens. Return for the year, all changes on a per year basis. Anyway, no issue. Change in price. This is nothing but, okay, unrealized capital gain. I told you na, NAV 1 minus NAV 0. Okay, the closing NAV minus opening NAV. The difference in NAV 0.75. Dividend received plus capital gains received. This is realized capital gain. This is also capital gain. This is also capital gain. Okay, that is why I explained this is real unrealized capital gain and this is realized capital gain 1. Okay, total return comes to 3. Okay, divided by NAV 0, 12.25, opening NAV gives you the return of 24.49%. Are you understanding? Same thing they have presented in this way. Alternative, it can also be computed as NAV1 minus NAV0 plus D1 plus CG1. This is also CG, don't get confused. Okay, if all the dividends and capital gain are reinvested into additional, okay, that is next part. This is a part 1. Next, come to part 2. The return on investment as on 31st December 2010, if all the dividends and capital gains distribution are reinvested into additional units of the fund at 12.5% per unit. Now see what they are asking. You have to find the return on investment. You have to find the return on investment. But I make some changes. What I do, after receiving, I receive, see, 3 things I receive. One is that the capital gain appreciation, the unrealized capital gain, which I practically won't receive. Are you understanding? In the DMAT, it will show the appreciation, but you will not realize the cash. Are you understanding? Now, what will you realize? The dividend portion and the distributed capital portion. Correct? Up these two numbers, 1.25 and 1 rupee. So, total 2.25 rupees you will receive. This 2.25, what they are saying in the next part of the question, you reinvest at 12.5 per unit, at the NAV of 12.5 per unit and get the cash converted into units and, okay, we will calculate the total closing NAV, outstanding units into closing NAV. You will get the total value. Okay, you will get the closing value of all these investments. Shall we check? Very simple. You tell me how much is the amount reinvested? 2.25. 1.25 is the income, 1 rupee is the capital gain, 2.25. Now, into 300. Why 300? This is a, see, for 300 existing units, you had invested how much? 300 units. For these 300 units, you will receive 2.25 per unit. Now, total amount of cash, how much you will receive? 675. Out of this 675, okay, I need to reinvest, that is clear. But at what NAV, okay, I will reinvest opening NAV? No, the fund will not provide you the opening NAV. They will give you 12.5. Instead, they will give you this 12.5. Average NAV, okay, for the reinvestment is 12.5 they have given in the question. So 675 divided by 12.5, how many units will be allotted? New units will be 54 new units will be allotted. 54 new units will be allotted. See, now you tell me, originally you had 300, new allotment comes to 54 units, total how much? 354 units. What is this value of 354 units? Okay, NAV at the end, NAV, yes, at the end of the period is how much? They have given and the capital distributed reinvested, okay, yes, 13 rupees NAV is given, which means 300 units into, yes, this is price paid, okay, yes, 354 into, take your calculator, 1 second, 13, 354 into 13, 354 into 13 will give you the year end value of your investment. Closing value of your investments 4602, correct? Purchase price, okay, purchase price you need to deduct na price paid for 300 units. How much is that? 300 into 12.25. How much is that? 3675. Okay, how to compute the return? 4602, the value, okay, at the year end minus year beginning value divided by 3675, you will get 25.22%. Are you all understanding? Here 12.25 they have given as opening purchase price, correct? This you will invest, 300 units were invested at 12.25, hence the price paid is 3675. Are you all understanding? Next, take question number 5. SBI mutual fund has NAV of 8.5 at the beginning of the year. At the end of the year, NAV increases to 9.1. Meanwhile, fund distributes 0.91 as dividend and 0.75 as capital gains. What is the fund's return during the year? Had these distributions been reinvested as an average NAV of 8.75, assuming 200 units were purchased, what is the return? Similar type of question. See, change in price, this is unrealized capital gain, then you have dividend income, then capital gains. Total return comes to 2.25. This is normal return, okay, divided by initial NAV. You will get 26.47. If the dividend and capital gain total dividend and capital gain amount, okay, comes to how much? 1.65 into 200 units you purchase, and 1.65 is nothing but 0.9 plus 0.75. Okay, this 1.65 into 200, 330 you receive as income, dividend and capital gain. This you will reinvest. At what price? 8.75 they have given. You will get 37.71. Same type of question you can go through. 37.79. Originally you had 200 plus 37 units, so total 237 closing value. And for price paid for achieving this, okay, 200 units you only bought now. At 8.5 you got 1700. Okay, total return comes to 27.24. Take question number 6 for discussion. Okay, the following information is extracted from study mutual fund scheme. Asset value at the beginning of the month, then annualized return they have given, distributions made in the nature of income and capital gain. This is income and this is capital gain, which means this is all realized portion. This is realized income, this is realized capital gain. Okay, this amount, the differential amount they have given anything about no, annualized return they have given. Okay, calculate the month end NAV of the mutual fund scheme. Okay, no issues. In this question, they are asking us to reverse compute. Okay, reverse computation they are asking, very simple. See, annual return is 15%. This 15% I should equate it to what? Okay, NAV 1 minus NAV 0. This is unrealized capital gain plus income portion. Okay, plus realized capital gain. RCG na realized capital gain divided by NAV 0. If I solve this, okay, 12 point, what is happening here? Monthly return. See, annual return is, they have given annual return 15%, annualized return 15%. Now 15 divided by 12, monthly return is 1.25%. Equate it to 1.25%, that is what they have done. 1.0125 is equal to NAVT, na? Okay, during the maturity, which means NAV 1 minus 65.75, NAV 0 plus income in the nature of dividend and distributed capital gains divided by NAV 0, you will get NAV, closing NAV they are asking us to find. This is nothing but closing NAV. NAV 1 is how much? 65.78. How much you get? Yes, 65.78. Next. Of the mutual, okay. Provide a brief comment on the month end NAV. Very simple. There is no change in NAV. Okay. If there is any change in NAV, you should say the NAV has dropped this much percentage. If there was one question in May 24 examination where they asked the same type of question, and they asked us to comment. In the comment, the NAV was not same as the initial NAV. Okay, in the institute module they have given this question, but the exam they may ask the NAV might be something different. Okay, it can be NAV 1 can be more than NAV 0 or less than NAV 0. You should comment the NAV has appreciated this much percentage or NAV has dropped this much percentage. It would be better. Okay, next take question number 7. Cinderella Mutual Fund has the following assets in scheme Rudolph at the close of business on 31st March 2014. Okay, Nairobi Limited, number of shares given, market price per 7. Dakar Limited, okay, number of shares and market price. Senegal Cairo Limited, the total number of units of scheme Rudolph are 10 lakhs. 10 lakhs units outstanding. The scheme Rudolph has accrued expenses of this much and other liabilities of 2 lakhs. Calculate the NAV per unit of the scheme Rudolph. See, NAV computation, you already know that all the assets, okay, will be added, and then the accrued expenses, the related expenses will be deducted, and you will divide it by number of units outstanding. You will get the NAV. But here the important thing is that the investments, okay, which you have, the mutual fund will invest your money in various schemes. It may invest in equity shares, it may invest in bonds, debentures, listed, unlisted, all these securities. These securities, if the securities are listed, generally listed securities will be valued, the market value will be considered, market price will be considered for valuing these listed securities. Unlisted securities, as per the question, okay, if the question mentions it will be valued at cost, or if the value diminished, you will value as per the data given in the question. Are you understanding? Generally, market value will be considered wherever the securities are listed. Okay, see what happens here. Now, I have shares in Nairobi Limited, the fund house. This is about mutual fund. So, mutual fund investor 25,000 shares at 20 rupees, and this is all the value, okay, of the value of the investments of the mutual fund. For 20 lakhs, 20,000 is the value. Now, this is the total value of the assets or investments. Now, from this you need to reduce the accrued expense, other liability. You will get total value as this much. In this question, okay, there is no cash balance. If the question is giving you adjustments related to cash, you have opening cash will be there. Some adjustments will be made. Okay, the receipt in between and the payment in between will be considered, and you will get the closing cash balance. That closing cash balance you should answer. It is something similar to calculating book value. Something similar to calculating book value. That's on net assets only. But only thing is the investments will be valued at the market price. Okay, investments will be valued, listed investments will be valued, and unlisted investments and other securities will be valued as per the question. Okay, the question will mention what method to use or how much the number to be used. Okay, how much is the this to be used. Okay, now see. Number of units, we have total value, other liability, after deducting all the other liabilities, you will get the total value as 15 lakh 70,000. Number of units outstanding 10 lakhs, you will get the closing NAV of 41.57. Next, take question number 8 for discussion. Okay, a mutual fund company has the following assets under it on the close of business as on 1st of February, 2nd February. Okay, L Limited, M Limited, N Limited and P Limited, all these data given. Number of units, total number of units outstanding 6 lakhs units. Calculate the net assets of the value of the fund. Then part A, simple and straightforward, net assets value. Okay, I just add all the value of these investments. They have given 4 lakh. See, nothing, what you should do, opening net, this is, yes, calculate net assets value of the fund, which means they have not given anything, which means I will value first initially on 1st of February 2012, I will try to value. What happens? Number of shares into 20,000 into 20 plus 30,000 into 312.4 plus 20,000 into 361.2. Like this, if you add all these investments, okay, value divided by number of units outstanding, 6 lakhs units outstanding, you will get 78.84 as the NAV. Correct? Next, part 2, what they are asking, this is simple and straightforward. Come to part 2. Assuming one Mr. A submits a check of 30 lakhs to the mutual fund, and the fund manager of this company purchases 8,000 shares of M Limited, and the balance amount is held in bank. In such a case, what would be the position of the fund? See, now they are asking that Mr. A, okay, Mr. A, one Mr. A submits a check of 30 lakhs to the mutual fund, and the fund manager of the company purchases 8,000 shares of M Limited. You tell me, children. M Limited share price on 1st of February is how much? 312.4, which means what they are saying, one investor is paying 30, this is open-ended scheme. Any investor can come in between and can redeem in between also, no issues. Now 30 lakhs amount, okay, Mr. A is coming up with, and he is asking the company to, the fund house to allot the units. How many units will be allotted? First of all, you need to compute 30 lakhs divided by, okay, 8,000 shares of M Limited he is purchasing, which means 8,000 shares into 312.4. How much you are getting? 24 lakh 99,200. which means initially 30 lakhs was the amount received from the investor, correct? This is MF account, okay? This is credit of 30 lakhs it had na. Now you tell me what it purchased. 8,000 shares, 8k into 312.4 it purchased, it debited. This amount will be reduced now. Up what will be the balance amount? We will see. This will affect the cash position of the company. See what happens, very simple. The revised position of the fund shall be, what will happen to the revised position? Very simple. N limited 20,000 shares will be there, same, no change. M limited, instead of 30,000 shares, you have 38,000 because of additional 8,000 shares it purchased, correct? And at what price? 312.4. This amount will get increased. Next, N limited will be same, P limited will be same, everything will be same. Apart from that, there will be cash balance also with the company, because company received 30 lakhs cash. Out of that, it invested how much? 2449, 800 or something, na? Yeah, 200. Then what is that? See, I'll compute it. 8,000 into 312.4. How much is that? 2499, 200. Minus 30 lakhs minus 2499, 200. See, 5 lakhs, 800. This is the closing cash balance. Are you all understanding the computation? Okay, which means 30 lakhs you receive. Then I purchased it 2499, 200. Balance, cash balance should be considered 5 lakh 8,000. I told you na, cash will be added. What is this? This is total value of assets, 503 lakhs 2,000. Now, this, how many units? What they are asking in part 2, please tell me. Okay, in such a case, what would be the position of the fund? Which means how many units outstanding in the fund? See, very simple. You have total value of investments 503 lakhs 2,000, and what will be the units outstanding of the fund? 6 lakhs existing units divided by fresh cash received na 30 lakhs divided by 78.84, which you found out in the NAV. Okay, at 78.84 NAV, the fund will receive 30 lakhs na from this investor. How many new units will be there? 38,053. This plus existing 6 lakh units total comes to 6 lakhs 38,53. Are you all understanding? Next, part 3, what they are asking, find the NAV of the fund as on 2nd February 2012. What they are asking, what is the revised NAV? What will be the revised NAV? See, very simple. On 2nd February, they have given the new market price data na, that you will consider, and existing shares you will take 20,000, 38,000. Here 38,000, 30,000 plus 8,000 which you received. Are you all understanding? This 38,000 into 360. Like this, revised market price are given. Total market value comes to 5,24,86,800. Cash position also same. This is the adjustments to be made. So how much is that? NAV as on 2nd February, 5,24,86,800. Revised net assets value divided by 6,83,053. Revised number of units. You will get 82.26. This is NAV. Closing NAV as on 2nd February. Okay. Question number 9. On 1st April 2009, Fair Return Mutual Fund has the following assets and prices at 4 p.m. A Limited, B Limited, C Limited, DA Limited. Number of units of funds given as 8 lakhs. Okay. This is number of shares given. The these are all follow assets, okay, which the mutual fund invested in, okay, and market price of these assets given, respective market price given. Next, NAV of the fund as on 1st April 2009, assuming that on 1st April 2009, Mr. X HNI sent a check of 50 lakhs to the fund, and fund manager immediately purchases 18,000 shares of C Limited and balance held in bank. Then what will be the position of fund? Now suppose on the 2nd April, the market price is this much. What will be the NAV? This similar question, I think the previous question also, yes, exactly the previous question also we solved like this. Okay, anyway, we'll check out the solution. See, very simple. First, you need to find the NAV as on 1st April. Opening NAV, they've asked us to find out, and this is the market price given. Okay, the investment market price given for these investments. See here, question number 9. So, what do you do? Simple. All the market value you add divided by number of units outstanding, okay, you will get the NAV, opening NAV. Next, the revised position, assuming the 1st April itself, the HNI sent this much check and immediately 18,000 shares he purchased and the balance held in bank, which means C Limited, na, C Limited instead of 10,000, he is adding plus 18,000 additionally he is buying. Out of 50,000, na, 50 lakhs, 18,000 shares is buying. What is the share price? 264.4. So 50 lakhs divided by 264.4, which means 18,910 shares. Okay, this is like, yes, 264.4, 50 lakhs. How many shares is buying? Yes, 18,000 shares is buying. Sorry, entire 50 lakhs will not be used. 18,000 shares of C Limited will be bought. 18,000 into, how much is the amount? 264.4. 47 lakhs 59,200, which means the balance, okay, will be cash in hand. The balance will be cash in hand. 2,40,800 minus 50. Yes, 2,40,800. Balance will be cash in hand. This will be the total net assets. Okay. Now this is the total net assets value. Okay. And you have number of units outstanding. How to find it? Number of units, earlier 8 lakh units was there. New number of units 50 lakhs the amount. Okay, divided by NAV 19.0475. 19.0475. This we computed in step number 1. Step number 1. 119.05 na. This NAV, if you divide it, you will get the amount. Okay, 8,42,000. Then this is the total. 42. This is 42,000. This you will get as 42,000, and this one 8 lakhs plus 42,000 total units outstanding. So which means this is the total NAV. This is the total units outstanding. Come to C part. In C part, what they are asking, 2nd April, this is the revised position. What will be the new NAV? Very simple. Calculate the revised amount. Cash will be same. And this is the total net assets divided by, anyway, revised new number of shares. Okay, 42,000 new shares have been issued. That also we will consider and find out NAV as 122.027. Nothing great in this question. Very simple and straightforward question. Same, ditto same as question number 8. Okay. Now move on to question number 9. Question number 10. See. This is mark it as important, very important. Regularly asked in the exam, every 1 or 2 attempts they ask this. 1 or 2 attempts in the sense, okay, 1 or 2 years they ask it, because the questions has to be rotated. I think every 3 or 4 attempts they ask these type of questions. Either now they have MCQ also, na, they can also ask in MCQ or in descriptive portion. Mr. Sinha has invested in 3 mutual fund schemes as per the details below. Date of investment 1/12/2008, scheme X, scheme Y 1/1/2009 and 1/3/2009. Date very important, because you need to find out holding period return, number of days. Okay, annualized return, holding period return. They will give the all this data and twist the question and give you. Sometimes they may ask even to reverse work the solution. So hence date is very important. The initial investment date is very important, so that you need to compute the holding period return or even annualized return. Okay, amount of investment 5 lakhs in the scheme X, 1 lakh in scheme Y and 50,000 in scheme Z. Net assets value at entry date. Okay, entry date net assets value given. Dividend received up to 31/3/2009 is given, and NAV at 31/3/2009. Closing NAV given. You are required to calculate the effective yield on per annum basis. This is very important. Why I am stressing? Okay, there are 2 types of return: holding period return, okay, and effective per annum annualized return. Now there is one more thing, CAGR. If you hold multiple years, say 3 to 5 years, if you are holding an investment, okay, we need to compute something called a CAGR. We learned in fixed income securities itself, correct? There we learned how to compute CAGR. Anyway, I will show. Okay, institute earlier did not include the CAGR based solution. They only did average annual return. They just annualized it and show 5-year return means just divided by 5 and annual return, which is not correct, because in our subject you have to consider time value of money, and if you consider time value, it is called as compounded annual growth rate, which is CAGR return you will find. Anyway, we will see. I think in the next question we will see. No issues. See, you are required to calculate effective yield on per annum basis in respect of each of the 3 schemes. So we need to find effective yield first. See here, step by step we will see. Investment amount 5 lakhs, 1 lakh and 50,000. Simple. Opening NAV is 10.5, 10 and 10. See, if you divide your investment with opening NAV, what you will get? Number of units you will get. Opening outstanding units, number of units 47,619, 10,000, 5,000. Are you understanding? Next, this is unit NAV on 31/3/2009. Closing NAV given 10.4, 10.1 and 9.8. All these are given. Now, total NAV as on 31/3/2009. What do you do? Number of units outstanding. Okay. Any new issue, nothing given na. So, number of units into closing NAV. You will find total NAV, total closing NAV. These are all total closing NAV. See, first opening NAV given, investment amount given. Okay, you will get number of units. This then closing NAV is given, number of units into closing NAV. But this need not same if new units have been issued. But in this question, luckily, new units have not been issued. So what the number of units, which means even opening units, if you take that multiplied with the closing NAV, you will get total closing net assets value, total value. Now, you see increase and decrease of NAV, which means the return you need to find out. Very simple. This return, see, I told you now the return maybe capital gains, okay, and from income, correct? Majorly the return will come from two sources, na, right? So here in this case, what I am doing, one second, just yeah, see, in this case what I am doing, the return I am earning capital gains and income, right? This capital gains also, unrealized capital gain, you see how much the change is. See, yes, the value was 5 lakh rupees you invested initially, correct? It became how much? 4,95,5 to 38.12. Up 4 lakh negative return, na, it reduced 4,95,000 to 38.12 minus 5 lakhs. How much you are getting? Minus 4761.88. This is what they have done. This is with respect to unrealized capital gains. Are you all understanding? Next to come to income. They already have put it here. See, can you? Yes. Can you see this here? Increase or decrease of NAV is nothing but change in NAV, which is, okay, change in the value, which means capital gain or loss. Here in this case, it is capital loss. Okay. For mutual fund, why it is capital gain? For this, it is loss. Very simple. If 50,000 you invested, it became 49,000. 1 lakh 1,000 is loss. 1 lakh you invested, it became 1 lakh 1,000. 1,000 is the gain. Okay, 5 lakh rupees you invested, it became 4,95,238. Okay, 4,761 loss. But this is unrealized capital gain. Na? There is one more thing. Dividend, na, you need to consider this income. Up 9,500 is the dividend received, minus 4,761.88 was the capital loss, and this is income. Net it off, you will get total yield as 4,738.12. This is minus 4,061 plus 9,500, minus 1,000 plus 1,500, 2,500, minus 1,000 plus 0, minus 1,000. Are you understanding? So, total return from the investment. You get the total return from the investment. I got capital gains return plus or minus I got dividend return. Are you understanding? Dividend return plus or minus capital gain or loss. I get the total return. Now, you need to find out annualized return. See, assume you want to okay, calculate the return only for 120 days, which means, see, you are only holding the mutual fund for 120 days, not even for one full year. You want to come up with the return which you get naturally is for 120 days return. Then if you want annualized return, you convert it using 365 by 120. Okay, whatever amount you are getting, multiply with 365 by 120. Are you understanding what I am trying to say? If you have annualized return, into, you want to compute holding period return. Into holding period return if you want to compute, and you are holding the investment for, assume 30 days, you will do 30 by 365. Are you understanding? Simple step, na? Same way here also. What is given in the question, you see, okay, yes, anyway, effective yield per annum basis I need to compute. So first what I will do, I will compute the return for day, I will compute the return. This is yield for respective days, which means if I, this, what is that, investment X, this mutual fund X I am holding for 121 days. Before, date of investment is important, na? From, see, 1/12/2008, I am holding it till 31/3/2009, okay? December, January, February, March. 4 months, okay, and days, 121 days, it comes to 121 days. I am computing the return. Then this is 90 days, this is 31 days. Now, when I compute the return, very simple, what I do now, okay, see, 47, I'll just show it, 47, one computation will show 4738.12, 4738.12 divided by what is the amount initially invested, 5 lakh, correct? This amount is 5 lakh na in the question. Yes, this is the initial investment amount. This is the total yield, correct? What is the return you are getting? 4738.12 divided by 5 lakh into 100. See, this is 0.9476, 0.9476, 0.9476 percentage. Agreed? This is called as holding period return, which means number of days you have na. So this is if you compute, this will be the holding period return. This is called as holding period return. Now you want holding period return, annualized return, annualized return. This is what is asked in question, which means very simple, 0.9476 percentage into this is a return which you earned for holding the investment for 121 days, which means what will be my return for 365 days into 365 by 121. Are you understanding? Can you solve this? 0.9476 into 365 divided by 121. Okay, 2.858 percentage, some number here. Okay, this is rounding off, no issue. Where you are getting the solution? Yes, 2.859 percentage given. Okay, this is how you will compute effective yield per annum. 90 days return into 365 by 90. Okay, then 31 days you will get the yield into 365 by 31. Are you understanding? This is the effective yield per annum. Next, what they are asking? Okay, yes, this question stands solved. Next, take question number 11. Very similar type of question. Only thing, in the previous question, what is the difference between question number 10 and 11? I will just show you. See here, in this question you are required to calculate effective yield per annum. Agreed? In this question, what they have done, effective yield per annum they have given. Are you understanding? They are asking us to compute number of units, total NAV, total yield, and number of in days investment held. Okay, this is also important. Just reverse working, no big deal. See here, amount of investment given, net assets time at a time of purchase. Up initially, how many units outstanding you will get? Agreed? See here, what is MFX? Number of units in each scheme. First step in a number of units. How to find? Very simple. Amount invested divided by opening NAV. You will get number of units in each scheme. Agreed? Next, total NAV. How to find total NAV? Very simple. Number of units outstanding into total NAV means total net assets, total value of the net assets, which means on a NAV per unit I am not asking, on a total basis. How will you do? Very simple. Given already 10.25. The closing NAV already given in the question here. Closing NAV given. From this step you find out number of units. Correct? No changes in units. Number of units into closing NAV. You will get, okay, the closing net assets value for all these three schemes, and I find total also, which is relevant. That is why I total also. Okay, each scheme you find out this thing and then you total it. You will get 7,99,068. No issues. Next, third part they are asking. So total NAV done, and now total yield. How to compute total yield? Very simple. First, initially, how much you invested initially. See the question number 11 given in the question. Yes, see 2 lakhs I invested plus 4 lakhs plus 2 lakhs, which means ultimately I invested 8 lakhs initially. That 8 lakh became how much? That 8 lakh, okay, you invested initially, okay, that 8 lakh became 7,99,068. Fine. Each scheme, how it is, yes, each scheme we will see. Okay, they have computed for each scheme, they have computed total yield. How to find it? See, for mutual fund X, very simple, 199,029.17 minus 2 lakh. This is capital gains portion. Apart from that, dividend 6,000 is being paid. Agreed? Are you understanding? So minus 970 is the unrealized capital gain plus 6,000. How much is that? This is capital loss plus 6,000. You will get the total yield. Are you understanding? Total yield means you you consider the capital gains portion or capital loss or the income as well, dividend if any. In the second part there is no dividend, no issues, only capital loss is there, minus 3960.4, and it is taken. For Z, mutual fund Z, 2,04,000 minus 2,04,000 is capital gain 5,000, total comes to 9,000. Total return comes to 10,068.77. Here I told you total should be considered 7,19,068. Okay, this is nothing but total value of the NAV. If you add a total of dividend 6,000 plus 5,000, 11,000. Okay, here if you add 11,000, then also okay you will get the same value as 10,068. Are you understanding? Next, total yield comes to 10,068.77 divided by 8 lakh into 100, which means this is total yield. How much is that? 1.2586, 1.2586 percentage. Now this you tell me, this is total yield, which means total yield, this is total return divided by total invested amount. Okay, this is the yield I will get. Now what they are asking now, the most important part is the fourth part, number of days okay investment is held. See, in the previous question they had given you initial investment date, from there you found out investment number of days the mutual fund you have invested the money in the fund. Now what they have given, yes, they have given yield and asked you to find they have asked you to find number of days you are holding the investment. How to find it? Very simple. Initial investment 2 lakhs, 4 lakhs, 2,000 for each scheme. Yield is 5,029. I just see, I just got the total yield na. This I will replace. Are you understanding? Okay, so yield I am getting. Yield in percentage terms, if I find out how much it is coming, 2.5146 minus 0.4. So this is, see this 1.2 which you don't get confused. This is total yield. Total yield. Okay, across all the mutual fund schemes. But here I need to find out for computing number of days I hold the investment for each scheme. Na? For this I need to calculate yield for each and every mutual fund scheme, which means yield generated by each and every schemes. So this is the yield 2.5146 percentage minus 0.9901 percentage and 4.5 percentage. All these, okay, all these are nothing but yield. This is nothing but yield, and this is holding period return. This is nothing but holding period yield. Are you understanding? Next, period of holding they need to compute. Now we need to compute. Here they have given in the question, what they have given in the question, effective yield per annum they have given. Annualized yield they have given as 9.66 minus 11.66 and 24.15, and holding period yield just now we computed. Using annualized yield and holding period yield, we need to compute the number of days investment. Okay, see, very simple how to compute it. I'll tell you. See here, you have annualized yield is nothing but annualized yield you will compute. Now, how will you compute? This is holding period yield. Holding period yield, okay, into 365 by holding period. HP na holding period, number of days. Assume number of days of investment. Holding your investment is HP na number holding period. Holding period yield is there. You annualize it into 365 by holding period. This is how you get na, correct? Now you, in this question you have annualized yield of 9.166 percentage and holding period return 9.66 and 2.5146. This is 2.5146 and this is 9.66, right, into 365 by holding period. Now you need to compute holding period na. Very simple, you bring it to here. Holding period is nothing but, okay, 2.5146 into 365 divided by 9.66. Okay, take your calculator and see 2.5146 into 365 divided by 9.66. You get the 95 days. Are you all understanding how it is solved? Like this, okay, you need to solve all the questions. Okay, hence they've got the annualized yield, they've got the number of days as 95 days and 31 days and 68 days. You back work it, 95 days, okay, is the period of holding. If period of holding is 95 days, from the maturity date, you reverse work, you reduce it, you will get the date of original investment. You will get the date of original investment. Alternatively, following dates can also be considered. This is nothing, without considering the two options are given, without considering the date, initial date of investment, okay, with considering the initial date of investments, which means if you consider the initial date of investments, it will be 27, 12, 17, 95 days. Out of this 95 days, if you calculate including the date of investment, it will be 27, 12, 17. If it is excluding date of investment, it will come to 26, 12, 2017. You can go through, okay. Take question number 12 for discussion. Mr. X on 1/7/2007. This is very important question. Mark it as very important question. During the initial offer of some mutual fund invested in 10,000 units having face value of 10 for each unit. On 31/3/2008, the dividend paid by the MF was 10%, and Mr. X found that his annualized yield was 153.33%. On 31/3/2009, 20% dividend was given. On 31/3/2010, Mr. X redeemed all his balance unit of 11,296 when his annualized yield was this much. See, in this question, annualized given. Okay. In some other question, if they give holding period return, you need to consider that. Okay. Here they have given annualized yield. What are the NAVs as on 31/3/2008, 31/3/2009, 31/3/2010? This is a question that is being asked. See, what we will do, step by step we will find out. 31/3/2008 we will find out, then 31/3/9 and 10. 31/3/2008 NAV for the first year, how to find out? Okay, very simple. 10,000 units it was having face value of 10. Agreed? And dividend paid at the end of 2008, dividend paid 10%, which means 10,000 is the dividend. 10,000 is a number of units and face value is 10 into 10%, which means how much it is? Okay, see 10,000 into 10, 1 lakh into 10%, 10,000 is the dividend paid the first year. And annualized yield given as 153.33. Are you all understanding? He invested on 1/7, July 2007, which means April, May, June, which means he is holding only for 9 months, and they have given annualized yield as 153.33. Are you understanding? Now, we will convert this annualized yield to holding period 9 months return, then we will use the data. See here, yield for 9 months, first we will convert the yield for 9 months, 115% is the yield for 9 months. Agreed? Now, you have to find the market value of investment as on the closing date, that is 31/3/2008. Very simple. NAV you need to compute. Now, NAV is nothing but market value of investments, okay, and plus or minus cash balance, if any, closing cash balance, divided by number of units outstanding. This we need to do, correct? Now, market value of investments appreciated to 115%. NAV, okay, which is yield, then only yield is 115%. Now, what you should do, very simple, you see, 1 lakh rupees you invested, see, I will show you here, 1 lakh rupees you invested into 115%, then 2.15 lakhs, correct? This will be into, 1 second, how much? Yes, return is 115%. Yes, return is 115%, which means into 215%, which means capital will be there 1 lakh into 1 lakh, 115%, 1.15 lakh plus 1 lakh will be your capital, total 2.15 lakhs. Are you all understanding what I am trying to say? So 1 lakh into 115%, okay, this will be there plus this 1 lakh, so 2,15,000 will be the market value of investments. Are you all understanding? This is just a market value of investments. But apart from that, if you pay dividend, if you pay out dividend, what they have given, the dividend paid by MF was 10%, which means the dividend is paid outflow for the mutual fund, which means this will reduce NAV because the net assets will be reduced to that extent. Yeah, are you understanding? Whatever amount is paid as dividend, the net assets will reduce. The cash will go out, so net assets will reduce. But 2.15 lakhs minus 10,000 will be reduced. Correct? How much it is? 2,05,000. Are you understanding? Divided by 10,000 units outstanding, you will get NAV 20.5 is the NAV. Are you understanding? So NAV, see here also given, very very important, NAV would stand reduced to the extent of dividend payout, which is 10,000. Okay. Next, this is now 10,000 units are gone. Now since see what they are asking in the yes, you see, so NAV as on 31/3/2008 is done. Now what they are saying is on 31/3/2009 20% dividend was given. Yes, 20%, 20%, how much is the dividend given? 20%. See, what they have done is that now the dividend was see what they have done now, since this is a dividend reinvestment scheme, they have assumed that, okay, this is dividend reinvestment scheme. Why? Because yes, if you notice, yes, if you notice that Mr. X redeemed all his balance units, like this they are mentioning for the third year. Okay, after the at the end of third year, this person is redeeming all his 11,296 units, which means, okay, initially he started with how many units? 10,000 units. Okay, how it became 11,296.1111? Despite giving dividend, you should assume that it is reinvested. The dividend is reinvested at the existing NAV. Whenever the dividend is being paid, okay, X dividend price will be there na NAV. That will be considered for reinvestment of the dividend. So very simple. 10,000 dividend was distributed on 31/3/2008. This 10,000, what he will do? Okay, he will acquire additional units. He will acquire additional units on the same date, 31/3/2008. What I will do on that date? What was the NAV? 20 points. See here, I have written here. On that date, NAV was 20.5. So by using 20.5, 10,000 divided by 20.5, additionally 487.8 units he will purchase. He will receive. This total number of units, this along with the initial 10,000, how many units will be outstanding? 10,487.8. Are you all understanding? 31/3/2008 closing NAV is 20.5. Number of units outstanding on that date will be 10,487.8. No issues till now. Okay, anyway, alternative, I don't want to show this. I assume that whatever we discussed is clear. Okay, now we will move on to the next issue. See here, now we will move on to next issue, that is, see, these are all alternative given, alternative, okay, this is alternative. Now come to third issue. Dividend as on 31/3/2009, second year end, you are getting a dividend of how much? One more dividend, 20 rupees, 20% is dividend, which means effectively 10,000 into 10, 1 lakh into 20%, face value will apply, and then you will get 20,000 as dividend. Are you all understanding? So how much is the dividend? 20, yes, see here, if 10,000 was the number of units outstanding, you will get 20,000 as dividend. But here, we have reinvested the dividend earlier, so number of units change, na? Very simple. Number of units outstanding, 10,487.8 into 10 into 20%. How much is that? 20,975.6. This is the, okay, dividend amount received at the end of the second year. Are you all understanding? Now, you have this dividend. What you will do? Put it in pocket or reinvest? How you reinvest? At some closing NAV, na? At the closing NAV, you need to reinvest. But the catch, what is the catch? There is no closing NAV given in the question. How should you work out? Very simple. Let X be the NAV as on 31/3/2009. You don't know the second year end NAV. You will assume it to be X. Then, number of units reinvested will be how much? 20. The dividend amount 975.6 divided by X. X is nothing but the NAV. At that NAV prevailing on the second year end, you will invest, but you don't know the NAV now. So assume it to be X. That is the question. Now reverse working, they are asking us to compute it, right? You assume it to be X. Now they are saying, okay, that this will be turned, correct? Yes, this is what happened in second year. Upper second year end, you have opening 10,487.8 units plus, what is this called? This is nothing but new units issue. This is nothing but new additional units purchased, okay, or by reinvesting the dividend, correct? This is the reinvestment amount which you purchase new units. This is existing units. The total you should equate it to 11,296.11, because what they have given in the question now, see the second year data given, but nothing given what additional units have been added in year 2. But what they have told now, on at the end of year 3, 31/3/2010, Mr. X redeemed all his balance 11,296.11 units, which means, okay, the third year end, I am redeeming all the units. Dividend data given, nothing given, which means third year you are not receiving any dividend, correct? So second year end closing balance, you don't know, okay, that will be nothing consist of opening balance of the at the end of opening balance of the second year plus additional units converted, the dividend converted into new units. This will be the same as 11,296.11. Are you understanding? Year 3, there is no change with respect to units. No change. No dividend allotted, so no reinvestment. They have given the closing units, which means you will equate this number to this. Very simple. Okay, so see the equation, you will understand. So 10,000, see 11,296.11 is equal to 20,975.6. This is nothing but new units to be new units, okay, allotted due to dividend reinvestment. Are you all understanding? This is nothing but dividends converted to units. At what NAV? I don't know the NAV, which is 31/3/2009. NAV prevailing at 31/3/2009. I don't know, but I put it as X and equate. Okay, plus 10,487, which is nothing but, okay, opening second year opening number of units. Are you all understanding? If you equate it, if you solve this, you will get the NAV as on 31/3/2009, simple and straightforward, 25.95. Then, okay, NAV as on 31/3/2010, how to find out? Very simple. For that, they have given you return. For that, they have given you, see, annualized yield is 73.52%, which means, see, this from 31/3/2010, from first day, 1/7/2007, initially you had 9 months in this year, year end 2008, then you have 12 months for 2009, again 12 months for 2010, which means 24 plus 9, 33 months return, 33 months annualized return is given as how much? 73.52. How to do? Very simple. You need annualized return, you need holding period return, you need holding period return. 1 lakh you had initial, correct? This is the capital. This is initial investment. Capital or initial investment, okay? Plus return, how much return it generated? 73.52 on an annualized basis. 73.52 on an annualized basis, which means, very simple, if you apply 73.52%, just for an example showing computation, see here 100 into 73.52 na 73,520, you will get 73,520, agreed? This you apply here, okay, here you will get the return portion alone, the 73.52% you can write 0.7352, okay, into 33/12 you need to do, and then you need to add plus 1 to that, okay, because this is the base, 1 lakh is the base. I'll tell you how much is this comes, you tell me. 0.7352 into 33 divided by 12, 2.0218 you are getting, na? This you add 1 plus 2.0218 means, see here what happens, 1 lakh is there. This is the return portion alone, correct? Apo, if 1 lakh I add the return portion, what will happen? Okay, 2.02, now 202% is the return, which means for every 1 lakh I am getting 2,02,180 rupees as return. So 1 lakh will be the capital plus 1 plus 2.0218, okay? How much is that? See here, how much it is? 1 lakh into 3.0218. How much you are getting? 30200. This will be the total assets value. This 30200, you have two components. 1 lakh capital component, initial investment, then 202 180, which represents the return portion, just now we computed na, this is okay, 202.0218 is nothing but 202 percentage, 202.18 percentage. So 1 lakh is the initial amount, 202 lakhs is the return, total comes to 30200. Now if you compute NAV per unit, is nothing but total net assets value 302,180 divided by 11,296.11, if I am right, 296 11,296.11. How much is that divided by 11,296.11? 26.75. Are you all understanding the solution? Very, very important question. 26.75. Yes. Now take question number 13.